presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello, everyone, and welcome to the Compact YouTube update for September the 3rd, 2024. I'm Moe Ansari, President of Compact Asset Management and the Chief Investment Officer. Don't forget to subscribe to this channel so whenever I do a YouTube update, you will be notified. Also, if you want the podcast, the weekly newsletter, all the other events that we have, make sure you register at compact.com/media, and you will get all of this information absolutely free. Looking at the numbers, last week the market was up 0.27% for the S&P. We saw the Russell down slightly, the NASDAQ down even more. So choppy trade is what we're looking at right now. Today, after the long weekend, market has a way of making a high right going into a long weekend. I don't know why, but that's what we've seen. Market goes to extremes, highs or lows, going into the long weekends. This has been a phenomenon of the last 30 years. I've talked about it a lot on Market Wrap over the years. And seems the same thing. Today the market was down over 2% for the S&P, over 3% for the NASDAQ, down about 600 points for the Dow. I think it's more of a corrective move. We saw Chinese numbers come out. They were not as good, slowing activity here, even though we did get the PMI today, which was better than expected. That is the Purchasing Managers Index for the manufacturing side, and it was as expected, and higher than last month, but still below 50. When it's below 50, it shows a contraction in the market, in the manufacturing sector. So seems like the global economies are slowing. Interest rates were down big today. So we'll see where we go. Last week, financials were the best sector. As interest rates continue to decline, financials continue to do well. Worst sector last week was technology. And today we saw NVIDIA down nearly 6-7% or 8% just about. So it was a big down move. And with all of NVIDIA going down to the downside, it pulled all the technology stocks with it. And it's September. As I've said, that's August and September. And September usually is the worst month for the market. So even though August has a way of making a bottom, but September is pretty choppy. Plus, we're getting closer to the election. As we get closer, the anxiety levels go up. And everybody's concerned about who will be the next president. And with that, oh my God, if this person gets elected, that's the end of America. That's the narrative we're going to hear from both sides. And it creates anxiety for a lot of people, even though we've had elections for the last 250 years or so. So again, it does make a difference in narrative. But again, the laws are made by Congress and the Senate and the House. Now, if they're all one-sided, as you've seen me talk about over the months, over the last few months, if it's all Democrats or Republicans, where we have a House, Senate, and the White House on one party, then it becomes a problem for the market because they can push through their agendas, whatever they may be, and they are usually, but if we don't have the checks and balances, we have a split government, usually that is good for the stock market. The less the government does, the better off the market is. That's capitalism. That's the way it works. Looking at oil, it is down again big on the slowing economy, and commodities were down across the board. As the Chinese numbers came out, their industrial activity was down quite a bit, and that shows just about all global economies are slowing. Now it's up to the Fed. What do they do in the next couple of weeks? And we have a lot of data coming out this week, which will really set the agenda for the Fed. Are they going to do 25 basis points, 1/4%, or are they going to do 0.5% interest rate reduction? I believe the Fed should go ahead, not fall behind the curve like they did when they were fighting inflation. They were late, and then they had to raise interest rates dramatically. They don't want to be late and the economy slows down too much and they have to dramatically cut rates. But even if they cut rates, it takes 6 to 9 months for the rates to filter through the economy, the rate cuts or the rate increases to filter through. So it will take time. I would like to see the Fed get ahead of the curve and do 50 basis points at their next meeting. Looking at interest rates, down last week, down again today. They're down big today. They're interest rate, the 10-year down, was up slightly last week from 3.81 to 3.91, but it is down big today. Interest rates are down. As the stock market comes down, interest rates come down, and that means the bond market goes up. The weekly chart, NVIDIA, you can see that it went straight up. Cisco did in 1996, went straight up and came straight down. I think we are seeing NVIDIA go straight up, but I don't think we come straight down. I think you can see that the earnings here, forward earnings are here for Cisco. You can see the forward earnings for, that's the brown line right here, are way up. The differences, just like I said in 2012 and 13, we saw these big companies like Google and Microsoft, and they were selling for huge discounts. And I said, these are great companies. I know they haven't done much over the last 10 years or so, and over the last 10 years, they've done very well. I think NVIDIA, as long as the companies are making money and earnings are going up, even though they're going up slower than the 125% quarter-over-quarter increases we're seeing for NVIDIA, those numbers are not sustainable. We are going to see a slowdown in growth, but it is still a very, very profitable company. So I think we go back and forth. Their new chips come out. They're delayed a little bit. Overall, I think NVIDIA is a long-term buy, not a short-term. You're going to see volatility, especially as we go into September and October, as the markets usually make a low somewhere in the middle of October. September and October are volatile and choppy, and that's what we're seeing today. Durable goods new orders last week came out. They were they were up 9.9%. GDP consumption was revised to 2.9, and the PCE, that's the Personal Consumption Expenditures Index, that's the inflation gauge that the Fed looks at, and that came in as expected. A lot of data coming out, as I mentioned earlier. ISM numbers came out. The PMI was at 47.2, consensus for 47.5, so slightly lower than expected. The big number that we get is non-farm payroll. That comes out on Friday. Expectation is 165,000 jobs created. We'll have to wait and see. Last month it was 114. So if we get a number again below 165 in employment, that means the number of jobs created. That means the Fed might have to go 0.5%. And I think a lot of this data will dictate what the Fed does at their next meeting. So it'll be the employment rate. We'll see how all of this comes out later on this week, and it's going to be a big market mover. Next week, we also have the debate, which a lot of people will be tuning into and making the final decisions of whom they're going to vote for. And I think that will be also a deciding factor, and that's also creating some anxiety in the market. Looking at the technicals, we made the fifth wave high, 5. That's usually a correction. Then we see an ABC. That's what we saw. Here's A, here's B, here's C, and we've started to move to the upside. 5504 is the 50-day moving average. Today we got as low as 5519 for the S&P. If we break below 5,500, then this, instead of this being a 1, 2, 3, it becomes another ABC move and just chop around back and forth. And we went up to the top. Seems to be the bottom. We need to break out above this all-time high to really start moving. Until we get above that, we're just in a back and forth choppy move. If we break below 5,500, then the 20-week moving average is 5412. That's what I would be looking at, about 100 points lower. So I think we are going to somewhere between 54 and 5,500 on this little pullback we're seeing. Just chop around in this area until we get some clarity on the election, until we get to the end of September and go from there. NASDAQ, on the other hand, today broke below. The blue line is the 50-day moving average. We're below that today. The red line is the 20-day moving average. We're below that today. And we're all the way down here. So again, a lot of chop back and forth, up and down is what we're seeing. And I think this chop continues with about 16,000 being the bottom and about 18.4, 18.5 was the top. And we're just going to chop around here until, as I mentioned last week, my dot plot, as I put it, When the market is below these dots right here, it's in a bearish mode. When it's above these dots right here, it is in a bullish mode. And usually when it turns down, it takes, it turned down here. That was October of last year. It took about 6, 7, 8 weeks on the downside right here before it made a bottom and came back up. That's why I think we are going to see some more chop around here. Today we did get below the 20-week moving average of 17,136. We closed at 17,103 or somewhere right around there. And then the next support is about 16,000, which is the 50-week moving average. 10-year interest rates down big today, down about 7 basis points today at somewhere around 7.8, 3.8, right around there. Again, interest rates, this was a spike. I still think 3.8 on the bottom and about 4% on the top is where we're going to stay until we see what the economy is doing. Crude oil down big today on the slowdown in China. Expectation the demand, global oil demand could go down, and that is putting some downward pressure on the oil market down to $70.34 last I looked at it. Small caps also down today, about 3% going into the close. 208 is going to be support. That's 20-day moving average. We're at 213. I still think we can get to 245, which is this high. And if you can break above 245 around here, then we could get up to the 258 to 285. But that we'll need interest rate cuts. Those are the small caps are the biggest beneficiary of interest rate cuts. Gold market pulling down a little bit today, not a lot, holding the 20-day moving average. That's the red line right here. If we break below that, 2440, seems like we've made the fifth wave top. And after the fifth wave, usually we get an A, B, C move to the downside, or just a sideways more of a pullback, unless we start a move to the downside, which I don't think in gold. I like the gold market in the long term, and I think it's a good opportunity on pullbacks to add some. Those are my thoughts. Those are my views. Again, if you need help with your portfolio, give us a call, or just go to compact.com and send us an email, or invest@compact.com and send us an email, and we'll get in touch with you, or just give us a call. Do it the old-fashioned way. Pick up the phone, give us a call, 800-388-9700, 800-388-9700. Those are my views. Those are my thoughts for this week. Again, if you'd like to get a more detailed analysis, Javed and I will do the podcast, which is about 30 to 45 minutes, a much more detailed look at what I just talked about. So tune into that. You can subscribe to that simply by going to compact.com/media. Have a wonderful week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.